Credit delinquencies hit 5-year highs as late payments reach pre-pandemic levels. Welcome to CreditGauge Live, your monthly analysis of the latest in credit trends. I'm Jeff Richardson, host of CreditGauge Live, coming to you from Manhattan. Here's the headlines. Auto loan delinquencies are up. Credit card originations are down. Overall credit balances are reaching a 5-year high. These are troubling trends. I'm joined as always by my colleagues Susan Fahy and Atif Mirza, our lead CreditGauge analysts. Susan, the first question to you, what's happening with auto loan delinquencies, and is there any difference in the credit card market?
As far as auto loans, in January, credit delinquencies increased across all days past due categories, and they've actually reached 5-year high. This increase is likely driven by elevated borrowing costs and economic conditions after the holiday shopping season. What we're seeing on credit cards is slightly different. So on credit card delinquencies, they've improved slightly, which is an indication that consumers are prioritizing their card payments in order to maintain access to available credit.
Thanks, Susan. Atif, next one over to you. How are account originations trending?
So January 2025 was a mixed month for credit originations. Personal loan demand went up. However, most notably, credit card originations were down month over month. This is primarily due to a reduced spending post-holiday season. And right now, consumers are managing their balances over applying for new credit.
Thanks, Atif. Really important insights. Susan, last one over to you. What movement are we seeing when it comes to credit balances?
In January, overall balances continued to inch higher, driven mainly by mortgages. The increase is due to elevated borrowing costs and rising home prices. But as balances increase, what we do see is then the balance to loan ratio has declined slightly in January. So it's at 51.4%. And what this indicates is that consumers are able to manage their debt obligations, at least for now.
Thank you, Susan. Atif, really important insights, and we'll be checking back with you next month. And next up, we're going to be talking about a really hot topic, which is the student loan market. Millions of student loans are at risk of being reported as in default, and we'll be joined by an expert on these matters, and that's Dan Currell, who was appointed Undersecretary and Senior Advisor at the Department of Education. Stick around, this is an important discussion you don't want to miss. Welcome back to CreditGauge Live, and I am very pleased to be joined by Dan Currell. As I mentioned before the break, Dan, you have held very senior appointed positions at the Department of Education, which of course has been in the news recently with millions of student loan borrowers, federal student loan borrowers that is, who may be reported delinquent or worse status to the credit bureaus over the next couple of months. So, Dan, I kind of want to start there. What are the challenges that consumers face who have these federal student loans?
Jeff, thanks so much. Yes, and very much in the news. And let me start by setting kind of the system a bit, and then we'll talk challenges within that. So number one, student loan borrowers owe the money to the federal government, to the Treasury, but the government has servicers who are interfacing with the borrowers. If you've been throwing some stuff in the garbage because you thought it was junk mail and you haven't really been hearing from anybody about you need to pay these student loans, check your quote unquote junk mail. It's from a servicer probably. You just need to get on top of that and figure out who the servicer is, and then get in contact with them. They'll work with you to get the payments going. So that's one thing. Another thing is this affects about 45 million people, $1.5 trillion or more in outstanding student loan debt right now. In terms of challenges, well, maybe that little comment about the servicers gives you a feel for there's complexity, there's uncertainty, and then there's payment. So with complexity, I'll say, not only are there a few different servicers, and it feels to people a little confusing, right? Like, who do I owe this to? Who am I paying it to? But there's also, there have been many different proposed repayment plans in recent years. The repayment plans themselves can be a little bit complicated. Strictly speaking, each borrower has a series of loans, not just one. It doesn't feel that way, but each semester you were in school, a new loan was initiated. And so that's, kind of some complexity. The uncertainty, honestly, is, especially at this moment in history, there's been so much contradictory communication for people that it's been hard to figure out. It's going to I think, simplify and at least be more consistent going forward for the next few years. And then finally, payment. Millions of people have not made any payments on student loans because from 2020 to 2023, the end of 23, they weren't being asked to, didn't have to. For another year from the end of 23 until October 1st of 24, they were meant to be paying, but they were also told at the same time there wouldn't really be an immediate consequence for not paying. Starting on October 1st of 24, payment is the challenge. And so people who have not been in the habit of paying and maybe don't have the budget to, now they got to pay.
This is a story that CreditGauge Live is going to be all over and on top of over the next couple of months. Dan, thank you for your time today and insights. Clearly, we're going to need you back in a couple of months. And thanks again.
Thanks, Jeff. Happy to come back.
And that's a wrap for this month's episode of CreditGauge Live. I want to thank our special guests, Dan Currell, our lead analyst, Atif Mirza, and Susan Fahy. We'll see you next month on VantageScore's CreditGauge Live.